Today, we're decoding a head spinning play. Is Donald Trump secretly rooting for a market meltdown? So, 7 trillion in US debt due in 6 months, and the refinancing at 4+ rates is a non starter for Team Donnie Trump. And their weapon of choice, tariffs. Those juicy taxes slapped on imports that could jack up prices on everything from steel to soybeans. These aren't just grenades, they are market spookers designed to stall growth, freak out stock trades, and send them sprinting to the bonds. Yields drop, refinancing costs shrink, and the feds might even slash rates. So, short term chaos, long term win. What happens to the real estate game when tariffs shake the board? So we're going to connect these dots for you on this episode, Real Estate Without Borders. We're going to cover like live. This is going to be my favorite episode, I think, that we've done so far, to be honest.
News episodes are always fun for sure.
Honestly, like we're just going back and forth with different X news posts because that's my new app of choice, man. If you're not on X and you're listening to this, I'm smarter than you. I'm just a fact, and I'm sorry to say it, but if you don't have,
not even sad or upset about it.
No,
embarrassed.
I'm just smarter. It's only learning on X. I only learn things. And
it's so easy to not learn, but it is definitely like the learning social media. Like I don't know. I feel like when I'm scrolling, like, but there's a lot of like higher quality information, news, etc. Right? Like it's a lot better.
Yeah, if you're gonna doom scroll,
scrolling through TikTok or whatever. Yeah.
Oh, for sure. Yeah, if you're gonna doom scroll, your X is the play. But all right, give us that. You got the first one pulled up. I got it here. If you don't got it.
Yeah, no, I got it. So it's a tweet. It says it's from Amit on X. It says, why Donald Trump wants the market to crash. In the short term, the chart below sums up the reason behind what the current administration is doing and why it's having adverse effects on the market. Chris Patel did a great job explaining this more in depth. We have $7 trillion in debt we need to pay in the next 6 months. If we don't pay it, we'll have to refinance. The Trump admin does not want to refinance at a 4% rate. The 10-year at one point was 4.8, right? So that's the rate at which they're going to be the interest rate that they have to pay on the debt when they go to refinance it. How do you get the 10-year? Yeah. How do you get the 10-year to come down? If markets show weakness, then they would reduce. So you have Doge basically being perceived as actually working, Donald Trump making the markets feel weak from tariffs. This creates massive uncertainties, and that can slow down growth in the short term, which would get the bond market to start buying bonds ASAP because people start rotating into bonds when the markets are uncertain, right? Because if they're afraid to touch stocks, they'll go start buying bonds. And once you increase the demand for bonds, you've got more and more people bidding up the price, the yield relative goes down, right? So conventional wisdom says tariffs are inflationary and the 10-year should be spiking on more tariffs, but it's actually going down because it's bringing so much uncertainty to the equity markets that people are selling stocks and buying bonds. Which is apparently, allegedly, and I'm not one to, I don't know whether or not I subscribe to the 4D chess thesis, but apparently this is exactly what the Trump administration wanted. They just haven't mentioned that. But I feel like a guy likes to take credit, like if he comes up with a good idea. Like if this was actually his idea, he'd be like, yo, this was my idea, right?
Donnie's playing chess.
Somebody send him this tweet so he can be like, yeah, well, that's what, all these people say the 4D chess thing, right? Like all of his supporters.
Explain that because I don't know what that is.
Basically, like I guess they think that he's playing chess in like 4 dimensions, right? So like imagine like a chessboard, like that's like a ball. It's got to be a cube, I guess, at that point, right? Cube, pieces are floating, and so you're doing one. People think he's doing the move for one thing, but he's actually doing it for some other thing way over there in the different dimension, right? Like I don't know, man. I mean, like sometimes the guy does some decently like pretty smart stuff, but I don't know if like
he's a smart guy.
I totally agree. Yeah, but
he's not a dumb guy. Hate him or love him, he's not. Like
speaking of that, because like one of our other news headlines is that I think Trudeau did say that he was dumb.
That's right.
It's in here somewhere.
I'm not sure if he's allowed to call people dumb, but I got a question that I wanted because I know I did some research on this, but you mentioned in that tweet, it talks about like the way to create uncertainties is to get the bond market to start buying bonds. Because they're scared of touching stocks and causing yields to fall is what they need to refinance debt. But because you're the guy to do this, what is a bond and what is a yield?
Okay, yeah, so a bond is basically a government debt. So like when you buy a bond, you're basically giving the government money to basically giving them a mortgage, right? So like consider it like a mortgage. Well, let's tie it back to real estate. We'll make it really easy to
Make it
understand.
for me. Yeah. Explain it
Yeah.
in crayon for the realtors and me.
Yeah. So it's basically like a mortgage. You're giving, so if RBC, you go buy a house, RBC, JP Morgan, whatever, gives you a mortgage, you're committing to pay them a yield. You're committing to pay them an interest rate, right? So they give you $1 million to buy a real estate investment. You commit to pay them 5% per year for 5 years, 10 years, 20 years, 15, 30 years in the US.
Okay.
That's you giving someone a bond, your word. Your word is your bond. You ever heard that? It's the same thing with government. They're giving you their word. The bond is a piece of paper that their word that they're going to pay you this rate is written on, right?
Okay.
And so that the yield is basically just the interest rate on that bond.
Okay.
Is that a good enough
No,
explanation?
it does. Yeah, no, it does. That was actually much simpler than I was reading. So you actually explained it better than AI, which is
Yeah. So the challenge here is that, there's also, so maybe let's also think about it as like a price for a property, right? So if you go buy a property, you're buying it all cash, and you buy a property for $1 million and it pays you 5% yield. So its rent or its cap rate is a 5% yield. If you pay more for that property, then the cap rate, the rent, the yield goes down, right? So that's how yields can go down, is if people are selling all the Nvidia and all their shit coins and all this stuff and rushing into bonds because the market feels uncertain and they want the certainty of a government paying debt for the next 10 years, then that increases the demand for these government bonds. And when the demand for something increases, that means people are willing to pay more. And when people are willing to pay more, the yield relative to the price goes down.
Can anybody buy a government bond?
Yeah, you can go buy a government bond. Yeah, you just do it through your bank.
Okay, give me an example of a government bond.
Well, there's only like the Government of Canada 5-year, and that's what. So like Government of Canada 5-year bond yield is what mortgage rates are based off of. No, not right now, but I have. Yeah, I did over the last little bit.
Interesting.
When yields were high.
What's the yield at right now? Sorry to cut you off.
Do you know? Yeah, for which one? So there's different denominations, right? So you can get like a 2-year, a 1-year, a 3-year, et cetera, and the rates vary based on basically what. So this is why bonds basically communicate what the market's expectation for the future interest rate environment is, right? So if you just Google right now US 10-year bond yield, it'll bring you a chart and it'll basically just show you the bond yield. So right now it's 4.256%. The interesting part is also, and this is again to tie it back to real estate a little bit, your interest rates that banks are willing to charge you for mortgages is kind of derivative of what your bond yields are. Because if I'm a bank, right, like if I'm, Wells Fargo, whatever, and I can invest in either giving you, Dave, a mortgage, or I can invest in giving a mortgage to the US government.
Right.
I'm gonna consider maybe you a little bit more risk, right?
Right.
I would consider you maybe like, so I would charge you 1% more than I would charge the US government. And that's how banks price. So they basically price their mortgages based on typically a bond yield of the same time. So like if you're giving a 10-year mortgage, they'll go look at the 10-year bond yield, and then they'll add a risk premium of like 1 to 2% on top of that. And that's where your mortgage rate comes from. So your mortgage rate typically is floating 100 to 200 basis points above the bond yield of the same time horizon.
Okay, so the 10-year, I'm looking at as of March 5th, 2025, which is when we're filming this. The yield on the 10-year Treasury note is approximately 4.25%.
Yeah.
Is that what you're seeing?
Yep.
Okay, so that means if you're like, for the listeners that are looking, for the Americans here that are looking to get a mortgage, that means your mortgage rate would obviously be, let's say, like 1 to 2 points. But what they're getting rates at like around 6.5% right now, or high sixes, right? 6.7,
right. Yeah,
6.8.
Yeah, exactly. So that's your 4.25 plus 2%. Right?
Got it. Mm-hmm.
Well, and I guess you're talking about a 30-year. So if you, I think that so if you go to like US 30-year bond yield.
Oh, good point.
Right, 4.5. So there's your 4.5, and then you add 2% to it. 2% is the risk premium because American homeowners, they add 50. They're 50% riskier than the U.S. government.
What's the 30-year yield?
4.56.
Okay, so it's like a fractionally higher than the 10-year. Got it.
Yeah.
Cool.
So Yeah, I mean, but that also communicates like if an investor is willing to buy a US 30-year bond at 4.6%, they're basically assuming that interest rates are not going to be substantially higher or lower than that 4.6% for a 30-year period, or that they
Okay.
expect that if they were to commit to getting that yield, like that return over a 30-year period, that they don't think that they can do something better with the money for that
Okay.
period of time. Because if you buy a US 30-year bond, you've just given the government your money for 30 years.
You can't take it out for 30 years.
I think you can, but you pay a huge penalty.
I didn't know that. Okay, so like super simply, he doesn't want to refinance his $7 trillion debt at 4+%. So how do you bring down the rates? Cause uncertainty. So when stocks look risky, investors rush to bonds, which would then, when the more people are buying bonds, the yield, aka percent, would come down.
Yep.
Right.
Yep.
The tariffs are creating like economic fear. They're slowing growth, all that kind of stuff. So lower yield, lower interest rates, lowest rates would be cheaper debt financing. Correct. So if bond yields drop, the government would refinance at a lower, but
And this
okay,
is actually kind of where I like where the 40 chess thing makes you think
right.
like maybe they're right, because Donnie does always talk about getting mortgage rates down, and
Well, that's what I was just going to say.
This is one way to do it.
Right. So if they do this, then it would likely be that interest rates would drop, which would mean the housing market would maybe be in a little better of shape. No?
Yeah.
Oh,
If,
I mean,
if
it's not
rates come down,
the-
well, no, it certainly will support, like it'll help to resurrect some of the market for sure. Like that should get volume back. Like let's look at Canada as an example. Okay. In Canada, our mortgage rates went way up and then they started coming down. And now that they're lower and prices are down, people are buying again because people can afford to. In the US, and we've talked about this chart a couple of times on the show, but US housing affordability is like the worst that it's ever been, right? Or it's one of the worst that it's ever been. There's only two other
right.
times where it's been comparably bad. One was in the 80s when interest rates were like 18%. And the other one was in 2006, right before the global financial crisis, right?
Right. What were the rates then off the top of your head? Sorry for calling you out there, dude.
In 06 they were like 3-4%. Like they weren't they weren't like insanely low, but they were low. Yeah. Like you get a 5% mortgage. Yeah.
So Big Donnie, big strategic 4D chess guy, short-term pain, long-term gain. That's what they're saying from this specific tweet.
Yeah. That and a lot of people are also theorizing that Donald Trump is using tariffs to crush inflation, right? To crush like the economy. If you want to crush inflation, you can't just rely on disinflation. You would want deflation, right? You would want and things are too expensive, right? And so what he's doing is he's basically this would be something called demand destruction, right? If you destroy demand, then people start paying less for stuff and things become less expensive. All of a sudden all of your consumers have to compete, or sorry, all of your producers have to compete for consumers, so they have to reduce their prices.
Because I see like so many, especially on like TikTok, and everyone's, well, they're either for or against, and I see a lot of people against, obviously, and a lot of people for, but it seems like maybe he's a few steps ahead with some big master plan in place, but how we get there, I think, might be a bit of a roller coaster. I mean, who knows? So, crazy.
I mean, the guy clearly likes chaos. So, yeah, I would agree with what you're saying. Like that, and I guess it doesn't really matter whether or not it's actually his intention to do, like whether or not we're giving him credit for being smart enough to like engineer a reduction in bond yields, right? I don't know. I'm not fully sold on it, but it's probably happening. So I imagine he will tell us if he's going to take credit for it at the end. So
we will know
find out.
if Donnie's not.
Well, I mean, yeah, if it's a good thing, if it ends up being a good thing, then he'll probably take credit for it. So.
Exactly. You want to jump into the Fannie one, or what are you doing? Which one do you got?
Whatever. Yeah, I'm easy. I have what else do I have up here? The Fannie selling off.
Which one?
Yeah,
that one. I was gonna say. Kinda. I think that one's crazy.
Yeah, do it. Yeah, let's do it.
I learned this one. It's in our text messages, just in case you're wondering.
Yeah, I gotta find it. Yeah, I'll find it.
It's not too far out. Basically, it says Fannie Mae and Freddie Mac admit to halting foreclosure on just over 7 million. So that's what this tweet is saying is that's 7 million houses that should have come to market because they would have went to foreclosure. Now, I'll jump into this. First of all, I think it's mandatory that we explain Fannie Mae and Freddie Mac, because I'm pretty
Sure.
confident that any of the Canadian listeners on here, and honestly, maybe some of the American listeners too, probably don't understand what this is. And I'm just going off of what I spent last night doing that. Crazy when you get older, man. Now I'm looking at Fannie Mae and Freddie Mac, Googling it and making it so I can understand everything here. What a life change. 10 years ago, I was. Okay, so let's cover a little bit about Fannie Mae and Freddie Mac. So it seems what this tweet is talking about, it seems that Fannie Mae and Freddie Mac, which, okay, give me your off script Fannie Mae, Freddie Mac. If you want me to cover it on script.
Yeah, cover it on script because I don't want to be wrong.
Okay, I like it. Okay, we're gonna start by saying, so Fannie Mae and Freddie Mac, basically what this is all about is that they've helped prevent foreclosures on 7 million houses that specifically were reported for actions up to like mid 2024, keeping these homes off the market because they helped them financially from going into foreclosure. Okay, so research suggests that this intervention reduced the supply of foreclosed properties, potentially affecting housing prices. This evidence leans towards these actions being a part of efforts to stabilize the housing market, especially during the crises like 2008 and COVID-19. So now let me explain the background on Fannie Mae and Freddie Mac. So Fannie Mae and Freddie Mac are government-backed companies that buy mortgages from banks, helping more people get home loans. So they don't lend directly, but manage these loans, especially during tough times like 2008 financial crisis and the COVID-19 pandemic, when they stepped in to prevent foreclosures.
So to explain this a little bit more simply, like in the U.S., when a mortgage is like when you go get a mortgage, typically speaking to a mortgage originator. So the banks basically hire these mortgage originators, but the banks don't actually like they let's call it like lend the money, but typically they actually you're becoming part of like a mortgage-backed security. So the bank will originate the mortgage and then they'll sell it to Fannie or Freddie or the FHA. Like this is where you hear about the FHA loans, Federal Housing Administration, and they actually buy the loan and package it into a bond. Remember, we were talking about bonds earlier in this episode. They package it into a mortgage bond, right? Or mortgage-backed security. And investors can buy those mortgages to get a yield on if they want to buy the security of a bunch of borrowers paying their mortgages. The problem is a bunch of borrowers aren't paying their mortgages. In fact, apparently, like according to the Federal Housing Finance Agency, over 7 million mortgages and 46,000 foreclosure prevention actions in the second quarter of 2024 alone, since the start of conservatorships in 2008.
So that's
of
since
these
2008.
actions, yeah. So it's a long time, but
Right.
Of these actions, about 6.3 million have helped troubled homeowners stay in their homes, including 2.7 million permanent loan modifications. And I think you're going to talk a little bit about like the different ways that you can fix recourse.
Yeah, there's also another thing here. So it said Fannie Mae and Freddie Mac completed 46,378 foreclosure preventions during that quarter of basically the second quarter of 2024. So 46,378 foreclosure prevention in the second quarter of 2024.
Yeah, so it's kind of funny because you would want to wonder like, oh, if the U.S. economy is having such a rough go, like why is their delinquency rate still so historically low, right? And if you go back to like this is back to the 80s, like we're still well below like even other than that I guess year 2008 basically.
Right.
But it looks like it's kind of steadily climbing. The reason probably why like mortgage delinquencies are low in the U.S. is because people can just go delinquent and Fannie and Freddie will fix the problem for them, right? They'll come up with some sort of alternative situation. This is very similar to what's happening in many Western countries. This is one of my biggest concerns about the economy, where like globally, man, honestly, is that the accountability of debt is so much different than it was before, right?
Yeah.
Because like all of the debt, all the credit risk is insured away.
There's actually
and so Go
I
ahead.
sent you another tweet just before we aired today, before we went live, about the FHA loan of the day, part 1 of 4. It was a breakdown of a $236,000 loan at 3.5% in Tennessee. Basically, first payment date was March 1st, 2020. Payments were made all the way through April 1st, 2022. And then this person stopped paying. It shows a live account on this right here. Yeah, cool. So the borrower starts paying, not a single payment for 9 months later. Another partial claim for $13,000 was done to cover 9 more missed payments and bring the loan to current. So it's like, surely now the borrower will start paying. Nope. The borrower goes into 19 months without making a payment. Time to foreclose because the borrower has made 57 out of 57 times that they can't and won't make a payment. And then it said, nope, let's mod it instead. They just raised the interest rate. Crazy. So 57 missed payments. To help fix this, they just raised interest rates to 7.25 and a monthly payment increase of $400. 5 years of no payments. That's crazy, man. That's nuts.
Crazy.
Okay, sorry. There's a few things I want to, before I go into the types of foreclosures. Did you call it a mortgage? Was it mortgage?
A mortgage-backed security or a mortgage bond, yeah.
No. What's the mortgage person's name at that talks to the bank?
Mortgage originator.
That's a sick handle.
Sick handle. I was a mortgage originator once, actually.
Were you?
Yeah.
The mortgage originator?
Yeah, mortgage originator.
That'd be
Sounds
my handle.
sick, eh?
Dude,
That's
be my immediate switch Instagram handle.
Sounds so finance.
Dan, the
DV
mortgage
finance
originator.
over here.
All right, let me talk about the different types of foreclosure prevention actions. So, okay, because I didn't know any of these, honestly, and you're gonna have to help me with some of these. But it's okay. Different types of foreclosure preventative actions. Okay, so you guys understand that. There's number 1, permanent loan modification. So changing the loan terms, obviously, like lower interest rate, extended term, to make payments more affordable, allowing the borrower to stay in their home. So simple. We have that in Canada too. I think during the pandemic, they were always offering up stuff like that, I think.
Yeah, Canada. So for comparison, Canada has this thing called the mortgage charter, where basically now if you call your bank and say, hey, I'm having a really hard time paying my mortgage, they have to make financial accommodations for you.
Interesting. I didn't know that.
This is what I'm saying about debt, people not being accountable to debt. That's what's scary. Right.
Yeah, that's interesting. Okay, so you got repayment plans, allowing borrowers to catch up on missed payments over time, preventing default. This is one that I didn't know, and you mentioned you know about this, so you can elaborate. But forbearance plans, so temporarily reducing or suspending payments, often during a crisis, to give borrowers breathing room. Mm-hmm. It sounds like that's what they did for that live scenario we just ran through. Basically, you suspend a payment and then you just tack it on at the end with a higher interest rate?
Yeah, you can do that. You can balloon it to the end, right? So you just add it to the principal that's outstanding. Does that make sense? Yeah. Or you can there, like in Canada, we were allowing skip mortgage payments, right? That just got added to the end, right? So that would be a forbearance measure. Making the loan interest only for a little bit, right? And so that person's just not paying any principal, so that principal doesn't get deducted from what they're outstanding. There's a handful of different ways. I mean, this was super common during COVID, right? When a lot of like the builders and developers and owners were basically claiming force majeure to their so force majeure basically means like major issue, major problem. Big. I think it's just like major force, man. Like that's what it would be. Sounds like a sick like DJ name, actually.
Dan the originator, force majeure.
Yeah, but I don't know what it actually translates to, but I think it's just like major force, right? Like a major thing just happened to my real estate investment, which was COVID. Right. I need you to maybe make some concessions on this loan. I want to alter our agreement a little bit. I told you I was going to pay you, but that was before I couldn't run my my ritail business, without, that was before they started kicking people out of my restaurant. Yeah. Right. So could we maybe, it'd just be like you and I. It's like Dave, I buy some, you're like protein
Yeah, of course.
powder, right? Like,
Yeah.
I'm trying to think of legal, legitimate businesses that we might conduct together that would require a loan. I'm going to buy some protein powder off you, a lot of it, right? A ton of
A
it.
lot.
And then to say, I'll pay you over, like the next, give you like $10 a month for the next year. But then, somebody comes into the house and steals my protein powder. And it's like, yo, Dave, I'm not going to pay you anymore because it's stolen. I'm going to need a little bit of time. I'll make you whole, but this thing happened and I'm sorry. And it's like my fault, but I just need you to, and you'd be like, yeah, man, I'll help you out. Whatever. It's,
Force
it's
majeure.
just protein powder, dude. Right. But now imagine that on a house, right?
I love the analogy. That's protein powder. You made it simple for me to understand. Thanks, dude.
There you go.
Shit. Like, how do I make Dave understand this? Talk about the gym or protein, but creatine. I don't know, dude. What? Yeah. All right. And then we got short sales, selling the house for less than the mortgage balance with lender approval. I'm guessing this is foreclosure, or is it different? Selling the house for less than the mortgage balance.
So that would be if the owner wants to sell it, right? So basically, if the owners, so like imagine you lent me money on a mortgage and my house has gone down in value and I've stopped paying the mortgage. This isn't uncommon, by the way. This is happening a lot right now because values are down and people are having a hard time paying their mortgages. Because in a lot of cases, if people still have equity, they'll go borrow against the equity, or they'll feel comfortable to take on more debt to pay the mortgage or whatever. Most loans are more equity based than they are credit based, right? Based on the borrower's ability to service the loan. So, I go to you and I'm like, look, Dave, you got a mortgage on my property. I owe you 800 grand, but I can only sell this house for 700K right now, right? Either you can take me foreclosure and sell it for 700K yourself, and it's going to cost you a shit ton of money to do that because you got to go through court and blah, 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 and all this stuff. Or I can just sell it for 700K today and you take $100,000 hit and I'll tell you I'm sorry. Maybe we come to some agreement on how we can split the difference of what I owe you, right?
So that's a short sale.
No, I guess the other piece of a short sale is actually when it's lender led, right?
Okay, I got some. Okay, short sale. The homeowner is involved. The owner chooses to sell the home for less than they owe with lender approval, like you said.
Right.
It takes longer, even though it's called a short sale, which is kind of funny. The bank has to review offers, which is still the process. Less damage to credit. The homeowner avoids foreclosure, which is worse for their credit score, and more control. The owner can negotiate terms and possibly avoid eviction. Then you got a foreclosure, where the lender takes the home, the bank forces the sale after the owner stops making payments. It's a faster process. Once foreclosure starts, the bank moves quickly to recover losses. It's worse for your credit, obviously, and the owner loses all control. So a short sale is voluntary and helps limit financial damage, while a foreclosure is forced with harsher financial consequences. Man, I'm pretty smart after reading that. Interesting. Okay,
for sure.
But I mean, okay, the tweet was saying like, oh, that's 7 million houses that should have came to market. Like, I mean, I don't know. Maybe I just not a fan.
You're not a fan of what? That
I just don't think like, well, I mean, if it doesn't, I don't think that's, you can't just be like, oh, well, all 7 million are going to come to market. That's just like a,
no, of course not. No, of course not. Yeah. That's like that's what I would say. Right. No, but, no, I mean, obviously not, but it is concerning that, I mean, it's a lot of pending supply, right? Like if the government is having to help people pay their mortgages, those are people who probably can't hold on to their house much longer.
Right. Yeah. I understand. I get it. What was there was one more we wanted to cover here. Oh yeah, I know this is your favorite, the 443 federal buildings. You already got it up there?
I had it somewhere, yeah. Trump administration prepares to sell off hundreds of federal buildings. They announced Tuesday that they're considering selling off hundreds of non-core federal properties, according to the General Services Administration. They want to dispose of these because they have more than $430 million in annual operating costs. And let me just see.
They want to sell off they want to sell the headquarters of the Department of Justice.
Yeah, why not? Realistically, like, if they're actually gonna downsize the government, like all of these employees, and and people are so work from home, like, why does the government really need all of these assets, right?
And they also want to terminate the General Services Administration. Were also reportedly told to terminate 7,500 leases for federal offices.
Right.
Let's see. A House GOP report found that the federal government spends. Just so no one comes for me. Spends around $7 billion a year on office space, and not a single federal agency was utilizing more than 50% of their office space.
Well, you could probably just call that a waste. Like, mathematically, I would say that's probably
mathematically that seems like a waste.
They're wasting 50%.
Yeah.
Politics aside.
Politics aside, mathematically, that sounds like a waste to me.
Yeah. Yeah.
Let's see. Pull up some stats here.
I guess people are kind of like trying to mention that it's it's costly to actually close and relocate. I don't know, man. I feel like if they, like, some of these buildings are sick, right? Like, they're old vintage government buildings. Like, they probably would command a pretty decent buck, right? I don't know.
But who's buying these right now? Who's buying up?
Listeners to our show, man. We're gonna get some clients from this. We're gonna go
new podcast.
Go down there, present some offers down there to the GSA, whatever it's called.
Set up our office in the Department of Justice, FBI. That'd be kind of cool. We'd have a six.
Wouldn't that be sick?
We're currently in the FBI, Department
Federal
of Justice.
Bureau of Investments.
And so there's a bunch of stuff on this. Like, let's see. Based off of what I see on the Twitter polls of people supporting this or not, it seems that on Twitter, people are in support of this. They're also including properties named after former Vice President Dick Cheney and former House Speaker Nancy Pelosi. They're selling off 2 of those buildings named after them. I don't know what those are for, but I don't know.
All I know is that Nancy Pelosi is a very good investor. She has like the best returns. Going back to that pension fund episode, you want to outperform the S&P. You just need the governors to manage the money.
Let's see. Do you want to pull up one more?
Yeah, let's do it. I feel like we got a pretty long app here anyway, but
yeah, we can wrap it up, dude, if you want.
Well, I mean, it may be worth noting that the trade war is still going on, and Trudeau called Trump dumb, which I think was not a good move. It wasn't a good idea. The Canadian government is basically clapping back with a bunch of stuff. So they're doing reciprocal tariffs. Mexico is doing reciprocal tariffs, although it did seem like Mexico was willing to kind of strategize a bit with the U.S. and basically say that they would put tariffs on stuff from China. So I'm not sure what happened with that.
So Mexico's trying to I feel, again, I think it's like this from the beginning. And again, maybe I'm wrong, but I feel like since the beginning, it seems as though Mexico is much more willing to cooperate and try to like come to some form of conclusion. And it seems like Canada maybe is just trying to go like tit for tat, which, look, I understand. I think, look, I did a post about this and got shit on, or sorry, now we got to make it. I got pooped on. But I understand being a patriotic Canadian. I understand all that stuff. But at the same time, I think we should be more like solution oriented than just, I don't know. No, do I have the answer? No, I don't have the answer. I'm just a guy on a podcast. That's it.
Yeah. I guess I would have thought that the idea would have been just like wait it out and wait for the negative economic consequences to appear, and then that to me would have been, I would have just ignored it personally. But politicians gonna politic, man. They all want to be the center of attention, right? So
It's been a
any
whirlwind,
opportunity they can get to like get on the TV and just rah act like they're, and for at least for in Canada, the Liberals, it seems to be supporting them in the polls quite a bit. So they're going to keep doing it. I don't know, but it has surprised me, man, how quickly people have gone after one another. Like people have really like started to like Canadians hating Americans, as if it's a reflection of like, everyone's like, oh, like they voted for Trump. It's like, well, I think like 16% of the population did, right? Like, you got half the population shows up and then half of them vote for, right? So, I mean, technically not, I don't know. It's so like weird how people digress to this like nationalistic thing in times of, it's strange to me, very strange. I'm pro team like humans, right? Like I just want mankind to win, right? And I think that the easiest way for us to do that is to all work together, right?
Well, I think what Trudeau said that told Canadians to continue to boo the American national anthem. just
yeah,
silly.
like that's not cool. Like I'm not.
No, that's
like
causing additional problems for no
well, it's
reason.
also just like it has nothing to do with like you can't like hold the rest of, like I'm in California right now and everybody's like apologizing to us. I'm like, it's not your fault. Like like you don't have to apologize to me. Like I'm not silly enough to see this as a reflection of you. I'm not mad at you. Like some random American person that I don't know. But like apparently people are upset and they think, I don't know, man. It's kind of weird stuff. It's low IQ stuff, I think, man. That's my opinion. Like people who get, I don't know, not
I
cool.
couldn't agree more.
Don't boo the national anthem, folks. It's not nice.
We're just people helping people. That's it. We're for the people. We're down the middle.
Yeah.
All right.
Yeah.
Amazing.
On that note, we've covered all the things that we're supposed to talk about on our first date: politics, religion, etc. So we'll get out of here. We'll see you next week. Please follow the show, send it to your mom, send it to your pastor, politician, etc.